Good afternoon, viewers. Today we will dive into the latest developments in both the traditional financial world and the cryptocurrency space, as significant legal and institutional changes shape the future of the markets. Ripple executes massive 200 million XRP transfer amid market speculation. In a development that has captured the attention of the crypto market, Ripple has executed a significant transfer of 200 million XRP valued at over $407 million from one of its internal wallets to an undisclosed address. The high-value transaction was promptly detected on-chain and flagged by Whale Alert's X account, triggering widespread analysis and speculation across the digital asset community. The movement, which occurred in a single large-scale transaction, saw close to $500 million worth of XRP exit a Ripple-controlled wallet. While the receiving address remains officially classified as unknown, on-chain analysts suggest that it could represent either a newly established institutional-grade wallet or a previously unidentified internal custody solution, potentially tied to Ripple's strategic operations. Historically, Ripple has conducted major XRP movements at the beginning of each month, often aligned with escrow releases, internal rebalancing efforts, or preparations for strategic partnerships. This transaction, however, deviates from those established patterns. It was neither part of a scheduled monthly unlock nor accompanied by any public disclosures, raising questions about its intent and future implications. Potential drivers: strategic liquidity, custodial allocation, or institutional expansion. One prevailing theory is that the transfer is part of Ripple's ongoing expansion of its on-demand liquidity network, ODL, which facilitates near-instant cross-border settlements using XRP as a bridge asset, has seen growing adoption in key corridors such as Latin America, Southeast Asia, and the Middle East. Ensuring XRP is readily available in these regions may have necessitated the reallocation of funds to a wallet optimized for operational deployment. Another plausible explanation is that Ripple is preparing reserves for institutional custody arrangements or potential over-the-counter sales. Ripple has previously emphasized the role of OTC transactions in enabling strategic token distribution to financial institutions and fintech partners, offering greater market stability and reducing the disruptive impact of large sales on public exchanges. While Ripple has yet to issue an official statement regarding the transfer, the company's consistent commitment to transparency suggests that further clarification could be forthcoming, especially if the movement is connected to broader organizational initiatives or long-term infrastructure planning. Market reaction: composure amid scale. Despite the magnitude of the transaction, the XRP market responded with relative calm, and price levels remained largely stable in the immediate aftermath. In prior years, large XRP transfers by Ripple have sparked concerns among retail investors about potential downward pressure on price. However, the increased maturity and liquidity of the XRP market have dampened such volatility, allowing for more measured responses to high-volume token movements. Some market participants have even interpreted the transaction as a bullish indicator. Large transfers to non-exchange wallets are often associated with infrastructure realignment, ecosystem growth, or the onboarding of institutional players rather than imminent market sell-offs. Ripple's continued activity at this scale underscores its integral role in shaping the future of the XRP ledger as a high-utility, enterprise-grade blockchain network. With XRP playing an expanding role in international payments, central bank digital currency pilots, and decentralized finance initiatives, strategic token allocations like this one are likely to remain under intense scrutiny from analysts, institutional stakeholders, and regulatory observers alike. In this context, platforms such as Whale Alert play a vital role in maintaining market transparency by spotlighting major blockchain movements. And while the precise nature of this 200 million XRP transaction remains unclear, its size and timing signal Ripple's sustained efforts to position XRP for broader, systemic use in global value transfer. Until Ripple releases further details, speculation will continue to swirl, but the message is unmistakable. Ripple is once again moving with purpose, and the XRP Trump signs landmark crypto bill, repealing controversial IRS DeFi rule. In a milestone victory for the cryptocurrency industry, former President Donald Trump has officially signed into law the first-ever piece of legislation in the United States dedicated specifically to the crypto sector. This historic action, carried out on April 10, 2025, marks a significant turning point in how digital assets are viewed and regulated at the federal level. The newly enacted law repeals a controversial IRS rule that had placed stringent compliance burdens on decentralized finance platforms. The now-defunct regulation was introduced during the final phase of the Biden administration and had generated substantial backlash from within the blockchain and fintech communities. The rule effectively designated DeFi exchanges as brokers, thereby obligating them to collect, store, and report detailed user data to the Internal Revenue Service. Critics, including legal experts and developers, argued that such platforms, by their very decentralized and permissionless nature, are fundamentally incapable of fulfilling those requirements, as they do not operate with traditional intermediaries or centralized ownership structures. This repealed provision had its roots in the broader framework established by the 2021 Infrastructure Investment and Jobs Act, which sought to bolster tax compliance across digital asset transactions. Lawmakers behind the original effort claimed the rule was necessary to close tax loopholes and to improve visibility into blockchain-based financial activity. However, many in the crypto community asserted that the regulation not only overreached but also posed a serious threat to individual privacy and the open-source ethos that drives DeFi innovation. Utilizing the Congressional Review Act, members of both the House of Representatives and the Senate succeeded in passing a resolution to overturn the IRS rule. This legislative maneuver allows Congress to revoke recently enacted federal regulations by a simple majority vote, bypassing the need for a filibuster-proof supermajority. The Trump administration backed the resolution unequivocally, describing it as a critical safeguard for preserving America's position as a global leader in emerging technologies and innovation. The passage of this crypto-focused legislation, the first of its kind to be codified into United States law, sends a strong signal that Washington may be pivoting toward a more innovation-friendly stance. Industry leaders have welcomed the move as a step toward reducing regulatory uncertainty and encouraging investment in blockchain development and DeFi infrastructure. Some analysts believe this could also set the stage for further legislative action, including long-anticipated rules governing stablecoin issuance, crypto custody frameworks, and the formal classification of digital assets under United States law. However, not all reactions have been positive. Democratic lawmakers and some policy experts have expressed concern that repealing the IRS rule could undermine efforts to ensure tax compliance in the rapidly growing digital asset economy. Critics argue that the repeal may hinder the IRS's ability to detect and prosecute tax evasion involving crypto, especially when compared with more aggressive regulatory efforts currently underway in the European Union and among OECD nations. Bloomberg Law noted that the rollback may embolden actors seeking to obscure financial activity under the guise of decentralization. For now, the crypto industry is closely watching legislative developments that could define the next phase of regulation. In both chambers of Congress, committees are actively reviewing proposals aimed at creating a unified legal framework for digital assets. These initiatives include provisions for regulating stablecoin issuers, defining market conduct standards for crypto exchanges, and establishing protocols to ensure transparency without stifling technological progress. As debate continues, Trump's approval of this pioneering legislation may prove to be a pivotal moment in the United States' evolving relationship with blockchain technology and financial decentralization. It reflects a broader trend of legitimizing digital assets at the highest levels of government and potentially opens the door to a more structured, innovation-driven regulatory approach moving forward. SatLayer launches on Babylon Genesis, bringing Bitcoin collateral to DeFi. The launch of SatLayer's Phase 1 on Babylon Genesis marks a pivotal moment in the evolution of decentralized finance, as Bitcoin officially enters the DeFi space as usable collateral. This integration not only enhances liquidity and security across decentralized ecosystems, but also opens new avenues for yield generation with the world's most established digital asset. SatLayer, a Bitcoin staking protocol, is now live on Babylon Genesis, the world's first blockchain to be secured directly by Bitcoin. As one of the earliest res-staking protocols to debut on the platform, SatLayer allows users to leverage Bitcoin's unparalleled security and liquidity within decentralized systems. This capability enables BTC to serve as collateral across an expanding range of blockchain-based financial applications and services. The launch of SatLayer comes on the heels of Babylon Genesis introducing its native Baby token and Cube, a built-in liquid staking protocol. Cube offers users the ability to stake Baby tokens to earn rewards while actively participating in the Babylon Genesis ecosystem. When users stake Baby through Cube, they receive a derivative token called C-Baby, which functions as a yield-bearing asset. This C-Baby can be deployed in other DeFi applications, including SatLayer and Babylon's decentralized exchange tower. These integrations create a robust circular economy where users can multiply returns while enhancing the overall security of the network. Since Cube is natively integrated into the Babylon Genesis chain, it eliminates the need for bridging or interacting with external protocols. This seamless experience enables users to stake, earn, and redeploy assets within a unified, secure ecosystem. The introduction of C-Baby with Cube creates a multiplier effect on Baby's efficiency and yield generation, said Luke Xie, co-founder of SatLayer. He emphasized that SatLayer's mission is to interconnect various components of the ecosystem in a way that boosts both adoption and security without requiring a proportional increase in the amount of capital locked in smart contracts. The platform's mainnet debut is backed by over $250 million worth of Bitcoin already deposited, giving SatLayer a powerful and secure foundation to operate on. With these deposits, SatLayer seeks to redefine Bitcoin's utility by transforming it from a passive store of value into a programmable asset capable of being actively utilized in a wide range of decentralized applications. While the protocol is initially focused on Babylon Genesis, SatLayer's roadmap includes expansion to leading Layer 1 and Layer 2 networks. This cross-ecosystem vision will unlock novel use cases, such as under-collateralized lending, slashing insurance for validators, and on-chain prime brokerage services. Why this matters? SatLayer's arrival on Babylon Genesis is more than a product launch. It signals a transformative shift in the role Bitcoin plays within the broader DeFi landscape. By enabling Bitcoin to be staked and used as collateral, SatLayer enhances capital efficiency, boosts yield opportunities, and strengthens security throughout the blockchain ecosystem. This development lays the groundwork for deeper adoption of both Bitcoin and decentralized finance solutions, aligning the oldest crypto asset with the cutting edge of innovation.